A very good day, everyone. My name is Lisette Buijs. On behalf of Solarplaza, I'd like to welcome everyone into the room for the webinar on storage asset management. As you can see, the expert panelists are already lined up, excited to get going. But before we start, I'd kindly like to remind you, if you don't know Solarplaza yet, of what Solarplaza does and why we're here today. So Solarplaza is a global conference organizer. You might know us from our solar asset management events. We're hosting the 8th edition of Solar Asset Management North America, hopefully this year, finally again in person at the end of October, planned for 26th, 27th of October. And in the run-up to that event, we're hosting events like these virtually, where we still have the opportunity to engage, share thoughts, and also learn. So we're very happy that you took the time today to join us for one of these events where we're going to discuss a hot topic, hearing a lot about it. There's also a lot of question marks still and things that are unknown. So for that, we have these 4 expert speakers that are going to share their thoughts on the topic of storage asset management. The session will be recorded, so in case you have to drop out, you have other urgent matters, you'll be able to see it back later in the week. And of course, we encourage you to share all your questions to the panelists in the drop-down box here. And at the end of the conversation, our moderator of today will take those questions into the conversation. So for now, that's it. I want to get going straight away because we only have 1 hour to discuss such a hot topic with so many questions. So I'm giving the floor to Michael Eyman, Managing Director of Origis Services, who is today's moderator and who will guide us through the conversation. So Mike, the floor is yours, and enjoy, everyone.
Thanks, Lisette. Welcome everybody to this webinar panel today. We've got several experts in different areas, both from a contractual perspective to a technical perspective, who are going to be talking about the ins and outs of sort of storage and how that's evolving. As Lisette said, I'm Michael Eyman. I'm the Managing Director for Origis Services, which is, that one up there. And so I'll be moderating today's panel, and hopefully we'll be hearing some really insightful stuff from the other folks here on the panel. As a quick reminder, the last 15 minutes of the webinar, I'll be doing questions from folks who are out there. So I'm looking right down here at my computer, and so please go ahead and put your questions in, and when we get to that point, I'll be jumping over there and letting the panel address those. So starting off, I'd like Stephanie, if you'd like to introduce yourself, please.
Sure, Michael. Hello, Stephanie Paget. Welcome to my home. A little bit about myself. I've been in the power industry for about 20 years. I've supported traditional power plants for over 10 years, working with both ABB and GE. I then got the opportunity to transition into solar, where I led First Solar's O&M push into the third-party O&M space. I then moved from large utility scale solar to community solar by leading the asset management and the O&M team at Nautilus Solar. And I currently direct the distributed infrastructure and renewable strategy for NAES, the largest power generation service provider supporting over 50 gigawatts of generation. But for those of you that are still asking, who is NAES? NAES is an energy manager, a scheduling coordinator, a balancing authority, a remote control operator, an asset manager, a technical advisor, and an O&M provider. Thanks, Michael.
Thank you, Stephanie. Steve, you're next.
Yeah, thanks. Thank you, Mike. Hello, everybody. My name is Steve Hannawalt. I am co-founder and executive vice president at Power Factors. Power Factors provides a real-time asset performance management software platform for renewable power owners and operators throughout the world. And my background is energy, my entire career, the last 17 years in renewable power. And formerly with SunPower, I was the global O&M VP for 5 years. Thanks, Mike.
Sure, Ken.
Thanks, Michael. Hi, everybody. My name is Ken Kim, and I'm the VP of Technology and Equipment Procurement for Origis Energy. I spent a good decade of my career in energy storage and the renewables. Prior to coming to Origis, I was with a company called Greensmith as a CTO. Which was acquired by Wärtsilä back in 2017. And prior to that, I was with Samsung SDI. I was the VP of the strategy group that led the creation of energy storage business today at Samsung SDI back in 2008. So, you know, I'm a bit of an oddball out here today. My perspective from the energy storage actually comes from more on the front end of actually delivering the system that will last in the next 20 to 30 years, where a lot of my colleagues here today are managing these on the back end. So, you know, I come from a little bit of you know, throughout the supply chain, from the battery to integrator to now, you know, being a developer. So those are the topics that I'll be focused on today.
Thanks, Ken. You guys were all, I don't think you were as complimentary to yourselves as you should have. So before I kick off the questions, let me tell you what I see on this panel, right? So Ken Kim was sought for his specific expertise, deep expertise at a technical level in storage, and is really a deeply knowledgeable, it's hard to find experts in an area that's emerging. And so Ken, thank you for being on the panel. Steve, you mentioned that you were the co-founder and EVP, but you didn't mention that it was your brainchild, that you created that from the get-go, and that you're a technologist and a visionary in your own right. And thank you so much for being here. And Stephanie, when NACE was looking to move into solar and they needed an expert, they pulled you. And I think they made a great choice. So I really appreciate all of you guys being on this panel today. You're all deep experts and we're going to learn a lot, but we're going to start with Stephanie. So Stephanie, you know, when I think about battery energy storage, it's an evolving technology, and but it's not just an evolving technology. People think of that in terms of the batteries evolving, but it's also an evolving business model. And it's not just going to evolve on the front end, but over the 30-year life of these projects that these things are attached to, whether it's standalone, whether it's with solar, whether it's connected to some other form of power or thermal generation. Those business models are going to evolve during the lifetime of those installations. So it really presents a specific contractual challenge to sort of contemplate that and understand and make sure that you're putting contracts together at the front end that both acknowledge that flexibility and also enable owners and operators and everybody to really take advantage of that technology as it evolves in the marketplace. So I think NACE is ideally situated, being across so many different types of power. I mean, tell me, how do you approach this?
Yeah, and it's very different too. I would say battery storage is unique when you think about contracting and how we're going to be utilizing the asset and what we're going to need to service the asset. You know, but before I jump into that, can I just get a little personal for a second? I just want to say hi to all my industry's friends. I wish I could see you on the panel or see you on this WebEx, but of course I can't. It's been too long since I've seen you in person, and I really hope to get to see you soon, hopefully at Solarplaza. You know, we're in a very unique time today, and I've always been so inspired by this group of professionals, and today's opportunity to explore how our industry will continue to evolve really gets me excited. There's so much happening in our industry, and we've always referred to the solar coaster, but buckle up because it's about to get so crazy. We've got the administration's focus on 100% clean energy by 2035. We have the American Jobs Plan, consideration of the extension of the ITC, the proposal of an ITC for battery storage, the conversion of the ITC to direct pay, and last week, FERC issued a policy clarifying that regional grid operators will incorporate a carbon price. Things are changing. To make all this happen, we need all of us and more. We're so lucky to be in the best industry, and I thank all of you for what you do as well. Okay, so sorry about that. Back to the question. Yeah, and I'm going to go down a rabbit hole because, you know, when I think of service and I think of going and presenting, you know, I don't normally start with warranty management, but I guess that's changing too. And so let me start with, how did we get here? FERC Order 841 creates a clear framework for storage resources to operate in all wholesale electric markets and expands the universe of solutions that can compete to meet our electric system needs. So thanks to FERC, there's new market rules to foster and enhance a participation model for storage, and this is evolving in real time. So we're seeing the value of storage expand beyond ancillary services, which is key when you're thinking about all of these contracts. So storage is now actively involved in day-ahead and real-time markets. So careful data collection, processing, analysis, and close coordination with the scheduling coordinator is critical to avoid voiding these battery system warranties and seriously compromising the economic life of the asset. Warranty administration and the preparation of warranty claims by the operator or the asset manager for storage is more complicated than any other asset in the renewable space, at least in my opinion. The management of this warranty operating envelope will impact the project's revenue opportunities. We're going to want to use this storage system as dispatchable generation, dispatchable load, and as regulation resources. And we want to do all of this at the same time, but still maintain the integrity of the equipment. Asset managers, service providers will have to continuously evaluate the market to see if the operating strategy needs to be updated and how it will impact the warranties. Also, layering all these warranties requires a third-party perspective to manage and monitor the interconnectivity of these warranties along with the contracts. So that's what I really think about right now, and understanding how we're going to manage these contracts. But then you also want to think about, well, what about the scope, right? Like the scope has to be critical, at least when you're looking at these, how we're going to operate these assets for the life, right? So what I'm seeing is that OEMs want to take on scheduled preventative maintenance for the system, so they want to contract with them directly. And what we'll learn very quickly is that most of that scope is being subcontracted back to the service providers. So these OEMs are not going to set up local labor support with the quick response the system will demand once we have significant deployment of storage. It's just not sustainable, just like the solar industry learned. NAES is working with OEMs to help support their site maintenance scope. The O&M provider and the OEM are going to need to work hand in hand to support these systems efficiently and effectively. And then the other part of the contract that I'm seeing is a lot more need for substation services as part of the storage project. So this means, more need for medium voltage, high voltage transformer, circuit breakers, switch gears, substation equipment to be maintained by your service provider. So does it make sense to have another party involved to support that scope, or can you rely on your storage O&M provider? And then I'd say, the O&M challenge, and we'll get into lots of other details, but the O&M challenge of these systems in the short term is the amount of participants that will be involved in site maintenance until we get more comfortable with the modern solar model, which is utilizing your service provider for all scheduled maintenance activity and look to the OEMs for specific support. My guess is this will happen much quicker for storage than it did for solar because of the focus on meeting the nation's clean energy goals, which requires accelerated growth. So I'm excited to hear what everyone else has to say.
So it occurs to me that in order for the OEMs to be able to support that activity, right, you have to have enough financial incentive in the contracts, right? And PPA prices continuing to put pressure on it is going to continue to squeeze those contracts. So, Ken, from your perspective, what do the OEMs need to be providing as a package, both from a technology perspective, so that they can connect out to data aggregation platforms, but also from a service and response time warranty, as Stephanie was talking about, to sort of contemplate the fact that it's fine if you want to pull it all in-house, but when you have a response time and you're operating as a spinning reserve, as a higher and higher percentage of the grid, how do you how do you actually do that and ensure that you can respond in a timely manner when you're dealing across, you know, big geographic regions? So what do the OEMs need to give? What do they need? How do they need to come forward here in the marketplace?
Yeah, I think that the risk of deploying an asset like this, there are many that you can bucket into, like technology risk, the market risk, there's financial risk, there's regulation, or regulatory risks. The number of risks are sort of spread across the spectrum of the stakeholders, and I think really the key is putting the right ownership of those risks on the people who actually have control over that. So when we look at all these other risks that are inherent in these projects, and to some degree, all of us are in the business of taking risk. So we create this asset, and we deploy this asset to create revenue stream, and based on the return and the risk that's inherent in that project, that's how we get paid. So we're really in the business of managing the risk to some degrees. So when you look at what the OEM brings to the table, is they are the one that are responsible and has more direct control over the technology risks. And the difficulty at the moment is that because the industry is so young, and there's such a rapid growth within the industry, when still things are not so mature, there's a safety issues, there's a degradation, there's a failure of the equipment, the availability time, all of these come in play, and have them responsible for a certain portion that they are in control and they can be responsible for. It really is the key. I think that the OEMs and also the way the battery degrades with the how the battery is being used, all those things really need to be understood much better. The tendency of the customer, the reason that these solution becomes very expensive, is when we really don't understand technology, and when we think about how the market is evolving going forward, and we want to future-proof everything, is you're going to get an expensive system, and yet there are certain financial targets that all these assets has to meet, right? So that balance is really the key. And from contracting perspective, every day what I struggle with is where do I find that balance between the risk and a financial return? What I mean by it is that I have my personal belief is that anything that the reasonable requirements can be met with a technology and a good design, and even some of these aggressive, and most of this aggressive can be addressed with technology changes. Or technology building, we can overbuild things, and you could have redundant systems, for example. But these all come at cost. And so how do you optimize a system, yet be able to deliver to the requirement? And how do we make so that the customers understand the technology and ask for the requirement that really matters in their project? So that balance is very important, in my opinion.
Do you think the OEMs out there are ready? Because when you say risk, I hear like it gets translated in my brain into dollars. That's how it comes through my particular filter, right? And so, do you think the OEMs are really ready to step up and to manage a lot of those risks, like contractually, commit to do those on behalf of owners and operators and everybody else?
Yeah. So to the extent that they are responsible for, they try to manage that risk, and so the battery OEMs will come and give you a warranty for next 10, 20 years, whatever you want to buy from these guys, with the capacity requirements to meet a certain level of capacity of the battery with degradation. But they will put all kind of conditions to protect themselves. For example, the C rate has to be a certain rate, and C rate is not it's pretty well understood from the beginning of the project, because you're pretty much kept by the power level of inverter, right? So we know that pretty much upfront on what the maximum C rate is going to be. But things of the temperature, the ambient temperature in which the batteries are operated, the the average state of charge that the battery is resting, or even the depth of discharge. If you're going from 100% all the way down to 0%, it's a lot more punishing for the battery than trying to use the middle range, around the 50% SOC and going up and down in that region. So all of this has to be understood. So what the battery companies will do is try to get as close as you can to the use cases that you have and characterize the duty cycle to be able to put the warranty around each of the projects. And so what's kind of different from solar, where solar, the sole objective is put as much energy as you can to the grid, is the energy storage has many different applications with different objectives that all run kind of differently. And how do you optimize? And some of the applications you might care about dollar per kilowatt. Some maybe dollar per kilowatt hour is more important, and others maybe dollar per cycle is more important. So understanding the use cases and marrying that to the way you warrant, is kind of where things are today. But there are a lot of uncertainties in the regulatory because the rules change. So how do you future-proof? So if you want to do that, then you have to build a system that you not only do A, but now you have to be able to build a system that can do A and B. And again, it goes to the cost. So again, so any decisions that you make in optimization and requirement is really a trade-off against your financial decisions. So almost everything that I do actually end up being financial decision at the end of the day. Is how much risk is good, what is availability time, how do you calculate that? You calculate it in annual basis, a monthly basis. All this has an implication to how you design the systems. And also in the back end, how you create a service contract to be able to get to 98% availability or 99%. So what does that look like for your spare parts program? What does it look like you're stepping on site or in the region where you have to respond quickly? So all these things are really the trade-off to the cost. So really the key for us is to understand the customer needs and try to come up with the right balance, the trade-off between their priorities and objectives and what the technology can actually deliver.
Look, it's a technology. I mean, renewables as a whole has a ton of promise, right? And the people on this panel and the people listening to this panel have the commitment to deliver that promise, right? But I'm not sure everybody knows exactly what that is. I mean, when you think about all the ancillary services, voltage regulation, frequency regulation, reactive power, you think of merchant markets where, the value of that power at different times of day is going to have different meanings from a dollar perspective and from an operational perspective to the grids and the different ISOs. And that, how do you really get enough data in real time out of those systems to meet all those different use cases? Because I look at the complexity that sort of suggests that we need to get to, and we're nowhere near there. So, Steve, I know this is coming your way. How do we get there from where we are? Because the battery systems, particularly combined with solar, have so much potential, but integrating that data so that you can act on it in a real-time way to optimize that site. And it's more than just the uptime, right? It's really about the right power at the right time to financially deliver on obligations for the owners and deliver on obligations to the operators. But how is Power Factors attacking that? How does it need to be done, and what needs to happen? Because frankly, today, that part of it is the scariest part to me.
Yeah, no, I agree with you, Mike, and I also agree with Ken and Stephanie. When you first start thinking about a battery, you go, wow, this is really simple. It's a little cell, and then put these cells together and make a module, and then you make the modules into a rack. But it's not the technical complexity, it's the operational complexity that we're talking about here that is the real challenge that makes us, as Stephanie properly said, more complex than operating a solar power plant. And as Ken said, you take the wind, you take the sun, you try and convert as much of that into productive energy, and you got your product. But that's not how a battery system works. So like any other asset or energy asset, The BESS system needs real-time and historical operating data collected at high frequencies and high volumes. You need to pull this data in, you need to aggregate it, you need to normalize it, you need to cleanse it, and then you need to really understand and characterize its current economic performance, its current reliability, and then you need to backcast that into your what-if models. So the asset managers and the scheduling coordinators, they need to be constantly, I'm talking about throughout the day, day ahead, week ahead, they need to be constantly feeding historical operating data back into their what-if tools so that they can fine-tune those input assumptions so the models are reflecting reality. Because when we start out with a new asset class, it's a paper model. It's a theoretical performance model. It's a theoretical set of input assumptions to what are the operating characteristics, the degradation rates, the uptime, the performance. So we're starting with a blank slate, and data is our friend. We need lots of data, and we need it to be normalized. Now, how do you normalize something when you don't have standards? We don't have communication standards. We don't have data standards. We don't have reliability standards yet. Some of them are emerging. Some of them are being developed in Europe and so on. But right now, if you were to look at OEM availability guarantees, there's as many different definitions and calculations for system uptime as there are OEMs in the market. So we need to start developing some sort of standard. So when we're talking about availability, what are we talking at the cell level, at the module, at the system level, average? You know, what's the time frame? What are events are excusable and what are not excusable? So there's a lot of questions we need to answer. And frankly, you know, if you think about what is risk, risk is really uncertainty. How do we address uncertainty? With lots of good information. So we, as an asset performance management platform working with asset managers, scheduling coordinators and operators, are trying to pump that data back into the system to decrease risk by bringing more knowledge and reality to what these systems can really do and be able to operate them in a very flexible way, because as our other panelists have said, it's not going to be just delivering one product likely over the life of the asset. You're going to be shifting, you're going to be stacking revenues, maybe providing ancillary services here, a capacity contract there, you know, frequency control over here. And to do that without really damaging the equipment, which is not hard to do, is not a simple thing to know. And our operators need to be equipped with this information, or else I have a fear there's going to be a lot of operations outside of the warranty specification and envelope, and there's going to be some warranty claims that are denied and people left holding the bag.
Well, denying warranty claims and leaving people holding the bag is not new by any stretch in this industry. I would say, somewhat cynically, but you know, it occurs to me, Steve, all that stuff you said is true, but operationally, when you talk about, you know, operationalizing that data, it falls under different entities. Today, you've got scheduling entities, you've got, you know, operators that are monitoring the systems and actually running them or doing the maintenance on site, like NACE, like Origis Services, you know, and in order to, you know, effectively manage these systems in real time, do those sort of operations need to come together and be in one location? Does there need to be one platform to do that? Because today they're completely really separate, like the market activity versus operations activities, and this kind of blurs the line. And so between you and Stephanie, I'd kind of like to understand what needs to change there, not just from a data perspective, but from a structure perspective of the companies that are engaged.
Right. Well, I'll start off and then pass it to Stephanie. So there's two words that I think are really important that you're touching on, Mike: transparency and visibility. And when you look at a BESS system, you have many players. You have the OEM who's warranting something, a battery. Then you have the system integrator that's wrapping a warranty around the system and the battery. Then you have the EPC that's wrapping a warranty around the system integrator and the battery and the plant. And then you have an O&M who's wrapping and guarantees around their services and service response. So you've got at least 4 different warranted items, and there's going to be lots of fingers to be doing pointing here, right? So how does one do that unless one is looking at a common set of data with a common platform, which again gets back to transparency and visibility. So yes, we are a very big believer that we need to get some standardized communication protocols, because in a battery, you have a battery management system, you have an energy management system, you have the actual controller, which is doing the economic dispatch, the economic control, and then you have the device level information. That's lots and lots of data. More data, I would suggest, that you would have in a comparable size wind or solar system by a factor of 10. Massive quantities of data. All of these different stakeholders must be reading from the same sheet of music, or else we're going to do unwarranted operating, maybe not even consciously, right? The SC's over here in a trading room, and they're saying, do this. Do they really know what that physically means to the equipment out there in the field? And are they exceeding depth of discharge and throughput and all these other things that the OEM says thou shalt not do, or are you going to seriously negatively impact the economic life of the asset? So I really believe everyone needs a single pane of glass looking into the system and seeing the same things, so the right operational maintenance and economic dispatch can happen. And oh, by the way, who are going to be the owners? Well, they're owners who already have wind and solar plants, primarily in hybrid situations. So this is one of many asset classes that needs to be looked at holistically, run from a portfolio optimization basis, not a plant by plant basis. So yeah, I agree with you, Mike. I think that's the right approach. That's what we're starting to do with our owners and operators, and we see that as kind of the future of how we manage these assets.
Yeah, and Steve, you're really talking about how intertwined the system's actual operational profile is and how it will impact, right, the cost of the O&M of the asset. Right. So, I spent a lot of time thinking about, how do you contract around so much variability of the condition of the equipment? Your fixed fee scope is really going to have to be scrutinized. Think about, like, we might include the scope of these events related to this operator scenario, but if you decide to operate this way, that's not included. I mean, we're going to have to start to figure this out, right? I mean, there's going to be this scope is going to be very dynamic, and we need to be able to respond that way. And then, we keep talking about the risk, but where is the risk of the repair time? Immediate repair of this equipment is so important, and we've got to figure out where we're holding all of these spare parts, who's responsible for them. It seems that these designs are going to be as modular as possible, but that means you need someone who's really close to the site or on the site that can get that part in place and can get out there quickly, and that creates a lot of logistic problems as well.
What about the business models themselves? Are the operators and the QSEs or the scheduling entities, do they need to sort of meld together? Can those continue to be separate in a world where you have a market-based dispatchable asset?
Yeah, like, I mean, from my perspective, there has to be a lot of engagement between those parties, right? I don't know the answer today, but I think we need to be all talking to each other to figure out what is the best way to address this scope and to make sure that we are creating an optimal, operational strategy for the assets. I definitely think you have to incorporate all of them, right? When Ken is out there putting these contracts together, like everyone, the OEM, the integrator, the developer, the O&M provider, the operator, the energy manager, all of them need to be part of that conversation.
Yeah, agreed.
I agree. One of the challenges specific with the battery is that there's this innovation curve that they follow. So you got to look at their roadmap 2-3 years down the line. are you really going to have a same cells that you're deploying today, 5, 6, 10 years from now that you can replace, or do you want them to replace with the same old cell, 5 years down the line? And so that this interoperability, issues of being able to maintain this system for 20 years is not a trivial one. There's technology horror, and there's also a commercial barriers where it doesn't make sense for battery companies to stop all their line. Let's go back to 10 years ago so we can go in and augment these batteries that were deployed 10 years ago. So, it's just cost prohibitive, and it just doesn't make sense, right? So now you've got a cell is much better, much cheaper, and so how do we leverage that and it's in design, and how you design the system so that it could be maintained over a long period of time. But again, trying to design a system that could withstand the time of changes, it comes at a cost upfront cost, and these are the stuff that we need to really understand. And if we had a very standardized battery, for example, that can plug in, kind of like what you see in the lead acid market in the automobile industry, it doesn't really matter where you buy the battery from, as long as you plug it in and it missed your model, call's model number, it doesn't work. It doesn't matter you buy from LG or Samsung, right? So this kind of standardizes in the product. And also, Stephen, you mentioned about the development of the safety standards and the test standards, and all these things are kind of evolving. A good example would be like UA 9450 that were recently finalized, NFPA 855 for the standard safety standards, the fire standards. These are just beginning to emerge. So we are moving in the positive direction. It just takes a little bit of time for industry of this magnitude to kind of pick itself and again moving in the right direction.
So Ken, do you even think it makes sense though to design systems for to be able to handle the variability and the evolving market and operational sort of strategies around these beyond 10 years? Because when I think about like the cost curves on batteries and how quickly they're coming down, if I'm an asset owner and I'm projecting out when I'm going to replace the system, then I'm just going to rip the thing out in 10 years because what I'm going to replace it with is going to be a fraction of the cost of what I have today. So forget about retooling plants and everything else. Why would I want to pay for variability in a system that's 15 years out when I know between 8 and 11 years, I'm going to be ripping it out and replacing it for a fraction of the cost?
Yeah, and that's a really good question, Michael. And I think the answer depends on your application. So you got these batteries now. These OEMs are willing to give you 10, even 20-year warranties based on what the consumption of the life cycle of the battery is. So they would actually track the throughput of the battery. 10 years down the line, you might still have 70%, 80% of the capacity left. You don't want to go and replace this thing because the battery is cheaper. You still have a lot of usage left in those batteries. But how do you get to a point where? But then when it degrades, there is a minimum amount of energy or power output that typically these PPAs will require. So how do you stay above those minimum? So you do that through amalgamation instead of replacing the whole thing because it's cheaper, right? So that balance has to be there.
So do you see a future where sometimes you've got old systems and new systems operating side by side, where the old system is now in a simplified operating model and the new system has been brought in to sort of address the more complicated and evolved market? And by the way, this thought occurred to me today. So if this actually happens 10 years from now, everybody that's out there, you heard it here first. But what do you think, Ken? I mean, do you think that might happen? Because you're right. I mean, 60, 70, 80%. Why get rid of the batteries?
Yeah. Right. So the one trend that I'm beginning to see with a lot of the startup companies that are popping up today and things of that nature is really kind of address that that issue. One of the visions that there's really kind of two. Well, there's a lot of designs out there, but you put that into two big buckets. There's a centralized inverter that has big blocks of inverter with lots of strings behind them. Then there's a string inverter with much smaller blocks that are kind of working together in parallel to create the power level that's required by the project. So, if you look at even a few years ago, everybody starts out thinking about string inverter because it has advantages and O&Ms, but everybody almost always end up with central inverter because of the cost of the project. But you were beginning to see that equation change a little bit now with more entrance of the other product OEMs that are offering this kind of a solution. And I've actually even talked to one recent startup company who wants to make every battery put an inverter on each of the battery on a very small scale, and then have all the current collector on the AC side. So it's like almost like an AC battery, right? So you can just plug in and you can replace by. I mean, that's it's going to be pretty expensive. Expensive that is probably not going to work out. But at some point, it might make sense. It's kind of like what you saw the evolution of the micro inverters in the solar field. In some segments, it didn't make sense. It started to make sense as they scale, right? So it'll be a long time before we get there. Let's be clear about that. but there's the technologies that are being developed.
So
Mike, I'd like to.
One quick note to everybody out there. I don't see any questions coming up yet. We're coming on in the period where we would answer questions. So if you have any, please put them in. But go ahead, Steve.
I was just going to follow up on that. I see things the same way. Stephanie gave us the holy grail, decarbonization of the electric grid. How are we going to do that? You're not going to do it with intermittent variable resources and solar and wind. You're going to do it with the combination of those and batteries. That means batteries will have to be dispatchable. And dispatchability means wear and tear. Right now, what are the dispatchable units that are doing this? They're called gas-fired peaking turbines. How do we get rid of the gas-fired peakers? I think you're going to do it with batteries. And so I think going back to what Ken is saying, you're going to see different applications, and you're going to have basically sacrificial batteries that are getting beat to heck in a peaking mode, doing dispatch, and then you're going to have some base loaders just providing kind of base load energy. I know that's a weird sound, base load and batteries, but I think that's what's going to happen. And then operators and asset managers and SCs they're going to be operating each of these for their specific use case. But then you have to optimize the whole portfolio together. So you have a very complex optimization problem, as we've already said, where everyone needs access to the data. You need lots of it, and you need to be constantly updating your models. It's a very exciting future, but it can't be done unless we dispatch the battery. I don't see how we're going to decarbonize the grid without it.
So Stephanie, Steve just made the business model a lot more complicated in that last comment. So, which brings me back around to the business model. We're looking at this at Origis. I'm sure NACE is too. Do you need to be a QSE as well and go to that last mile of commercial dispatch combined with operations, given the complexity that's coming down the pipe because of all the stuff Ken has been building?
For sure. I mean, we're gonna do the exact same thing we did for solar, right? It's like, how do we continue to drive cost? And I think the way we've been successful in the renewable space is pulling in scope where it makes sense, right? Can you leverage a single provider in certain areas to be cross-functional across multiple different scopes? So you might need to pull in your schedule coordinator and your asset manager, your operator, right? We're gonna have to reimagine who is the right party to address some of this scope.
Who do you think
it is? I think it's a combination of specialists.
I feel like we're asking more questions than we're answering. So who is it? Who has the operational financial hot potato and is going to ultimately say, we're going to do this, right? Who do you think that rationally is? Because it's all about the push-pull of the financial benefit, but also the risk, right? And sometimes you get these dislocations between who's getting most of the financial gain and who's taking on most of the risk. So how do you put those together? What does that structure look like ideally? What do you think, Stephanie? I'm giving you the first thought.
Yeah, I think we're going to push a lot of that scope to our core service providers, right? We're gonna look at, we're going to definitely expand the capabilities of a traditional service provider, and it's going to be an energy manager type role, right? We're going to see a lot of consolidation between an operator, an energy manager, and an asset manager in order to really capture the value proposition of these assets. And then, of course, we're still going to have to look at, we keep focusing on the operational side, but we're still going to have to look at, what's in the field, right? So we still have to create a model where we can service and these assets in real time, and that's a challenge. Staffing these systems creates a real challenge. There's just not enough, at least in the model we're talking about today, there's not enough on-site work to justify manned sites, especially when you're going to have multiple participants. So I think you need to see a consolidation around that as well. Response times are going to be so critical, and so you have to use local labor. You have to look at opportunities to combine solar plus storage. Bundle it with with your substation, bundle it with your gen tie, your switch yard. Leverage local labor to be able to service all of those assets. So we're definitely going to get the opportunity to continue expand in this service space.
I don't know about you guys, but what I heard was that our contract pricing is going up. That's what I heard. That was the summary I got out of what Stephanie just said. Is on the operations side, our contract values are going to go up. So that's what I'm gonna stick with from there. Well, listen, I don't yet have any questions from the group, so I can only assume that either one of two things is happening. Either we're answering all of their questions before they ask them, or they're thinking these people don't know what they're talking about. I'm going to go with the first, and we're just going to keep moving forward. So, Steve said something a minute ago that I want to touch on and sort of take. He mentioned, gas peakers and a lot of your thermal plants today, which provide the spinning reserves, right, for our grid. So, I think, there's a broad argument about whether there should be a goal to eliminate those completely. I'm not going to attack that one today. I think that's a whole other conversation and more political than technological. But from our perspective, as we as a renewable industry take on more and more obligations of spinning reserves because of batteries, we're used to just, hey, it turns on at the beginning of the day, we sell it, we're out. So how does that change our obligations to the grid and what we need to do? I mean, Ken, jump in and give your viewpoint from the technology side, but frankly, I think to mature a little bit as an industry if we're really going to become, part of the industry as an equal player.
Yeah.
What do you think?
Well, first of all, whether you like it or not, it is a policy issue. It's a regulatory issue. I mean, I don't want to go into the whole Texas thing, but reserve margins, spinning reserve, that comes from the regulators. They set a price, and then the market fulfills that by building capacity. So yes, we're going to have to build capacity, and we're going to have different use cases for this capacity. And some of it will have a high capacity factor, some won't, but that's okay. That's what happens right now in the traditional fossil industry. You have specialized types of units, peakers and base load and swing units and so on and so forth. We need to replicate that with the solar industry and the renewable energy industry and batteries in particular. And then, as we've already said, that brings a lot more onus on us to take on that risk and to develop business models that are successful. But one of the things that Stephanie said, and you said also, Michael, is that, you don't really manage risk without a balance sheet. And you can't do that with a small, I hate to say it, mom and pop company. They cannot really back up the risk with their balance sheet. So what I think we're going to see, as Stephanie alluded to, is a lot of consolidation in the industry, local service providers under contract, but they're not bearing the risk. These larger, big entities are going to be bearing the risk and writing the contracts, but they're going to need a lot of local service people to do the physical wrench work. I see that as kind of the future, because if the onus is on us to keep the lights on, you can't do that and say, I'll get there tomorrow or the next day. You have to be able to respond immediately to issues.
So I do have a couple questions that have come through, and we have 10 minutes left, so I want to make sure we address those. Ken, the first one I think is directionally right at you. It was asking, they were asking, why are there so few providers in this space? Do you think there's an opportunity for C&I BESS providers and more of them to come along? Like, sort of how do you see the evolution of that on the manufacturer side of things?
Yeah, are you referring to the integrator or actually the battery guys?
I think that's something that you need to clarify in your answer. The difference between them, because most people don't even maybe realize that there is a difference.
Yeah, so let me just kind of, talk about a little bit of the supply chain. And there's battery guys that are making these batteries, lots of batteries, and there are plenty of them around the world, and a lot of them are doing very well addressing electric vehicle market. And there are a number of them actually cross over to the energy storage because it's the same format. So when you look at guys like Samsung SDI, LG Chem, the CATLs, the BYD of the world, they've made that crossover, and they now provide the full set of both in the EV side and energy storage side. And then there are these integrators who actually don't make those fit cells, but they buy these cells and then they buy the inverters. They put their own software with EMS on top of that and integrate. So you've seen a number of those integrators pop up in early, right around 2010-ish. Greensmith started, for example, 2008, right? And what we saw in the middle of the decade, like 2015, 16, 17, is a bit of a consolidation of these startup companies that started to address, in these so-called innovators. This is, by the way, when the Greensmith was also acquired by Wärtsilä back in 2017, right? So you saw guys like Extreme and Unakos and others that are just demand more on energy, One Energy. These companies were pretty much bought out by the larger companies. So you saw that's one of the consolidation, and that's one of the reasons why they're there. But from the battery perspective, again, there are a lot of companies, but there are a lot of companies that are solely focused on the energy on the electric vehicle side, and also there's some of the companies that are just not bankable. So bankability is really the key issue. So as an industry, what we did was we really gravitated toward the company that was a big balance sheet that can actually finance this, and the parent guarantee actually meant something, like Samsung and LGs of the world. And so that leaves very few options out there today. But those, it will change. More people will come, and more company will become more bankable. But what we're also seeing with particularly electric vehicle, if you really want to understand what's going on the battery side, you can't really understand without understanding the electric vehicle battery supply chain. And what you're seeing in the trend around the world is that the supply chain becoming closer to the customer. So you've seen most of the batteries being built out of Korea, China, and somewhere in Asia. They're being shipped all over the world. But now you're beginning to see a lot of these big mega factories being built in Europe, also in the United States is beginning to happen. So that whole balance will change. And these changes are not just because of the market demands, but also geopolitical risks that's associated with shipping batteries out of China, for example. The laws that are coming in play that's going to make a lot more restrictive, and not only restrictive but very expensive. So these mitigation for these kind of risks are now beginning to happen with companies. You see, for example, LG Chem looking for a battery company here in the United States. SK has already spent $1.9 billion into the factory in Georgia. Bypasses all the tariff, bypasses all of the expensive shipping. And so So you're going to see these kind of changes. But right now, that change is just beginning to happen. And so there is a very tightness in the supply chain because the supply has not kept with the demand of the growth of the industry here in the United States, solar plus storage. So it's going to be tight for a little while, but I expect that to be resolved within the next 12, 18 months.
Thanks. So I have another question here. Stephanie, both NACE and CAMS jumped into renewables this last year. Big, historically thermal service providers, asset management companies. And so when we think of storage in these contexts, we often think of them in the context of renewables, but frankly, storage is not necessarily connected to renewables. So one of the questions that came out, and I think it's an ideal one for you given that context, and being with NACE is where do BESS systems need to go to really, make the grid better, to really move us forward from a grid perspective? Is it just with renewables? Do they, where do you see them all needing to be deployed to really evolve our energy infrastructure?
Yeah, I really like the idea of, these virtual power plants, right? So the idea of bundling these with all different types of technology, not limiting it around, wind and solar, but really looking at it from a holistic perspective and to be able to mimic what we would traditionally use, a gas-fired plant or a combined cycle or something like that, right? So I think there's definitely an opportunity to look at the grid as a whole. I read a whole article about, really focusing on the interconnections of some of these plants that are retiring. So bringing in that virtual power plant design into areas like that, I think will really help to stabilize the grid, be able to offer, the flexibility that we're looking for. So I do think there's a lot of opportunity to look at, how do you utilize battery systems alone and certain specific activity in support of the grid, but then how do you bundle it with technology to really help us, in this energy transition that we're focused on today. So, yeah.
Steve, sort of tagging on to another question from the group, do you see data latency as being a problem when you start thinking of storage as being at interconnect points and arbitraging power from the grid to stabilize pricing and stabilize availability across all different forms of power and everything? Suddenly data latency, not just in relation to renewables, but becomes a problem, right? So yeah. Tell us a little bit about that.
It does. Obviously, 5G should help, but when you talk about remote operation center and control, the O side of O&M, data latency just does not work. Right? It's not acceptable because we run on a 60 cycle grid here, and that means you need rapid response to be able to support frequency control and all. So if we cannot depend on it, then of course you're going to have to do what the utilities and all do, and that's they have hard connects and they have VPNs, and they don't use the public internet for the control side. So I don't think that's necessarily the problem. The problem I see is back at the remote operation centers where your monitoring application now is becoming an overall Uber or supervisory portfolio optimization control system. Those systems, even though there's an air gap to meet, NERC cybersecurity issues, they need to be much more responsive, and latency will not be acceptable because now we are needing to, run economic dispatch and real-time operational control from the brains in central operations out into the plants where the local SCADA system is doing the local control. Again, there's ways around this. It's more costly. You use, traditional means, but I'm hoping that with some of the advances in the internet and 5G service and reliability, we don't have to go to those more expensive T1 and VPN, requirements.
So final question, and I think it's an interesting one, came from outside is, basically where do we put our money? If we're going to put storage someplace, where should we put it as a developer? Like, where is the place where are the locations that we should really be looking to put in dispatchable storage, that where they can, from a financial perspective, perform over time, which probably also means, can perform for the grid as well. This one's out to anybody who wants to jump on that one.
Where you have nodal prices that have high volatility, where there's grid congestion is where I'd put my money.
Grid congestion? What do you think, Stephanie?
Yeah, I think right now too, the markets are lagging a bit, right? So looking at markets that are really focused on being able to allow you to do that revenue stacking, right? Like you want to get the most for your dollar. So I would look at those industries that are really leading, or those markets that are really leading, and say, this is where I'm going to put it because I get to offer multiple different support, different applications.
What do you think, Ken?
Well, I think it's really looking at the generation mix of where these resources are going and where things are being retired, where there's going to be a demand, where demand is growing, and where there's going to be a need. As Steve mentioned, the congestion is another thing, and for a storage perspective, where a lot of the renewable is going, you're going to need a storage. So you have to look at all these dynamics in the market and find an optimal place for you.
I'll give a slightly different answer, and then I think we're out of time. But when I look at the industry and where it is today, I think from an insurance and finance perspective, we need the industry to grapple and figure out how to finance and insure the risks around these things so that we can finance these projects, so that we can move them forward. Financing is one of the big hurdles today for really grid level storage, regardless of where it is. And if I was going to put my money to solve something somewhere, that would be it.
Makes sense.
I think we're pretty much out of time here, although we had a lot more questions flow in. Hi, Lizette.
Hi, yes, thanks, Mike. Indeed, great time management, but also lots of questions still unanswered. So what I would like to propose is we take those questions, send them through to you, and in upcoming content that we have for the campaign, we can take those questions probably into the content. So thanks for a great engagement of the audience, as well as a great panel. We got some thank you notes already to all of you, so I'd like to pass them on straight away. But thanks, and looking forward to hopefully continuing this discussion in the Solar Asset Management North America Conference, where there will be plenty to discuss from what we heard today. So wish you all a great day, and thanks for attending, and to the speakers for sharing your knowledge.
Sounds great. Thank you, everybody. Thank you, Lizette, for the opportunity.
Good seeing everyone.
Bye now.